The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, happy Monday. So I got some things going on in the market today. Pretty quiet overall, though, just with everything that's going on about to come up this week. I mean, we're going to have another powerful, crazy Wednesday and Thursday. We'll probably lead on into Friday with everything that's happening. And first thing I'd like to do is start off with a quick market wrap to get you up to date on where the market's sitting at right now. We got the S&P down 2 points. We got the Russell holding steady right now, just up literally 10 cents. And we got the NASDAQ down 14.5 points. And we got the Dow up 10 points. And looking over at copper, it's up 1.21%, making a nice big move on the day. We got gold is down 8.5 points on the day. We got silver is down basically 0.5%, about the same as gold there. And we got natural gas is up 1.38, so the other big mover of the day. Looking over at oil, it's pretty flat. It's just down 37 cents on the day. And looking over at our ags, we got corn. It's actually down $11, so 1.4. So it's one of the three big movers of the day. So the three big movers so far being copper and natural gas and corn. And soybeans, it is moving, but not moving as much, 9.25 down, which is only about a 0.5% move. Looking over at the Aussie, we got it down 38 pips. We got the euro down 12 pips, and we got the pound up 6 pips on the day. So that's our summary of the market wrap and where everything is sitting at. And I want to remind everybody, we're going to be having, if you're going to be in the Tampa area at the end of this month, okay, on September 29th, Saturday, September 29th, we're going to be having an event called Dynamic Trading Strategies. And it's going to be free because Nadex is sponsoring it. So they're paying the bill, so you can come and you can check this out and you can learn. And so definitely maybe free, but it ain't, it's definitely valuable. Just like I said, Nadex sponsoring the event for you there. And it's going to be Saturday, September 29th. It's going to be held from 8:30 to 12 o'clock in Tampa. And it's going to be held over, all the details over here on Tiger. If you go over to the homepage, and you go to free live workshop and click on Dynamic Trading Strategies, you'll see it right there. You do have to register in order to have and reserve a seat. So if you just show up, we're going to be full. All right. So you got to register to reserve your seat. Now, it is going to be packed. And if you know you're going to be there, register. Okay. And grab that right now. And we're going to have Dan Cook from Nadex. We're going to have Tom O'Brien talking about identifying the trade, going into setting up the trade. I'm going to go into my diagnostic trading formula in more depth. And I'm going to be talking more about implied deviation levels and the diagnostic deviation levels we have. I'm going to go into spreads and binaries. I'm going to talk about different ways to trade them. And then we're going to come together, me and Tom are going to come together. We're going to do a risk and money management analysis. So we're going to look at different trade setups and how you can do risk and money management, how that would play out in Nadex. And then Dan Cook's going to wrap it up for the day. So it is going to be a powerful, packed 3.5-hour event. Again, absolutely free, thanks to our folks over at Nadex sponsoring that event for us. And that's going to be held at the Grand Hyatt, again, in Tampa Bay on September 29th from 8:30 to 12 noon Eastern Time. So again, if you can attend the event, we'd love to have you there. And, just hop on and fill in the information to reserve your seat. Okay, so for each person that, if it's you and 3 friends, each person needs to reserve their seat. And, if you have any questions, definitely give us a call. And, you can scroll into TFNN.com. Scroll down, you'll actually see our number right there we're on the bottom of the page and right in the middle bottom there. And that's 877-927-6648. And again, that's 877-927-6648. You can just give me a call right now. I can answer any questions you got about the market, Nadex in general, diagnostic trading. If you're outside the United States, give us a call at 727-445-1044. And if you don't have a Nadex account, you definitely need to grab a Nadex account, okay? And you can grab a free demo account with $25,000 of funny money in it. You can play with it. You can actually get a live account with the live platform, live charts, everything, okay? All the stuff included that Nadex has to offer. All you got to do is fund the account with a $100 deposit. Now, of course, I recommend if you're really going to be going in there and trading that you put more in, but you may want to open the demo account and the live account, and get the live account funded so you have that, but also have the demo account so you can play with it, so you can try out different strategies, things like that. And if your demo account expires, just call them and let them know. I can't guarantee that this will work or will always work, but so far, people that I know, they've called and they said, hey, I need more time on my demo account, or hey, I have a live account, I want a demo account to also be able to test things out on. Just call them, let them know they can extend that date for you, okay? And again, that's go on to TFNN.com, click on Nadex. You'll see that banner on the right side. Click on Create Account. Scroll on down there, you're going to see two different buttons. All right, you're going to see this big Start button for opening a live account, only $100 to deposit and fund it. And then you'll see Open a Demo Account. If you click on Open a Demo Account, then all you got to do is put in your username, first name, last name, phone number, email address. They'll send you a password in a matter of seconds, and you'll be able to log right in and see what it's all about. Okay, so definitely if you haven't done that, grab that demo account right now, and definitely check out the live account. You just got to click Start. It literally takes maybe 5 minutes to fill it out, and you just filled a few different pages here. Check off on the disclaimers, all that stuff. Hit submit, and you're in and you're ready to go. And you can fund it really fast. They have an e-check deposit. Literally, you just go on, you say, hey, I want to deposit money. And if you just opened your account, then they'll actually automatically deposit $250 up to $250 into your account while you're waiting on your check to clear. So if you put in $500, they'll put $250 in right away. Once the check clears, they'll put in the other $250. If you do $250, they'll do $250. If you do $100, they'll do $100. So, and that amount that they'll auto fund really fast for you actually goes up as the longer you have your account. And there's a second tier there and a second date. I don't know the exact number and date and all that, but that can get you going fast. You can, of course, do checks, wires, all that fun stuff too. But that's the fastest way to get going on Nadex. And you're going to want to go ahead and open this account and get it going, so that way you can learn not only from the show here, but you can be ready for the show that we're going to have at the end of the month, September 29th, in Tampa at the Hyatt with the Nadex sponsored event on dynamic trading strategies with me and Tommy and Dan Cook from Nadex. And again, go ahead and just check that out if you haven't done it already. All right, so the next thing we want to do is we want to look at what is going on in the market. Okay, well, today is a pretty quiet day as far as news goes for the United States. We really haven't had any. There is no news planned for the day as far as the big, government announcements. Friday there was a big rally, and that rally was actually one of the biggest things that drove that rally is China decided to do a little bit of quantitative easing, you could say. And they basically said that, hey, we're going to spend, a ton of money. And they literally went in and they said, we're going to spend 1 trillion won, which, is a lot of money. And, building highways, infrastructures, things like that, trying to stimulate their economy. And so that is really the big driving factor that sort of did that big push on Friday. And now we have some things coming up this week and some things that you really need to be aware of as a trader. If you're not aware of, you can just get blindsided by it, okay? So you got to be aware of what's coming up. And I call it, there's multiple things in the market, but you have to look at what I call style, and that's diagnostic trading. So yeah, you're looking at your technicals. Maybe you have your system, okay? And so you go over diagnostics as technicals, fundamentals, seasonals, okay? And also statistics. Well, part of fundamentals is government news announcements. And, maybe your system says buy or says sell. And the thing is, if, that's like, hey, your system says that, and that's like your doctor saying, okay, good checkup, good heart, go ahead and, you're good. But you walk out and walk in the street and you get hit by a bus because you don't look both ways before you cross the street. So know what announcements are coming out, so that way, sometimes it's a good idea to turn that system off or tighten those stops or, different things like that when those announcements are about to come out. And we have a couple buses coming this week. One of those I'm sure everybody knows about. If you've been listening, you know about the other one. But one of them is going to be the announcement, of course, on Thursday. On Wednesday, the Fed starts their meeting. On Thursday, they're going to come out. They're going to release their statement. They're going to release their economic projections. They're going to have their press conference. They're going to release the Fed funds rate. And, of course, in that statement and that press conference, we're going to see if they talk about actually doing quantitative easing preemptively right away. So, there are some, the inflation hasn't really overspiked as far as the way that they measure it. I mean, if you look at food and, fuel, then you may have a different, basically everybody has a different outtake on that than the Fed. But if you look at, just the way that they measure it, that hasn't fully justified it. Now, the other thing is, of course, the European debt crisis being one of the big driving factors of having to step in and do something, with the U.S. to, stabilize the economy. Well, as you know, Mario Draghi came out last week and his big press conference, the ECB press conference, and said, not only did I say we're going to do whatever it takes, but we will spend unlimited money buying bonds from other countries, which is actually a complete violation of the EU treaty, by the way. So that's completely interesting. And they'll buy a private bank. I mean, there's all these little things that they're actually breaking the EU treaty. So it's and everybody's going along with it. There's a few states or countries, members of the EU, that have issues. But so he made that announcement. Now he also made a subtext announcement where he said, so long as they agree to ask us for the money and they'll agree to all the austerity measures we require before we give them anything. So really, he has the best of both worlds. I've done everything I can, Mario says. I have offered to give them unlimited money with no cap on how much in the bonds that we'll buy. And I'll even do it at not a preferred rate. I'll do it at the market rate if they agree. Now, if they don't agree to my austerity measures, it's not my fault that we're not buying their bonds. So then he gets to blame it on that country, and that's why that's happening. So he really, really has set it to, be in his favor when eventually, because it's going to happen. And, like France has said, hey, we're not asking for anything. Italy's like, no way. Spain is basically not a chance. So they're not wanting to give in to any additional austerity measures. They saw how that went for Greece. It didn't go so well. They don't want to do it. So he really set himself up well. But the market reacted in such a way that, he went in there and he's like, this sounds really good. So the market flew up. And so, but bringing it back to the original topic of the Fed funds and quantitative easing, that sort of gives Bernanke an out of not to launch it right now. Okay? Now, the other one is unemployment. Unemployment came in horrible last week. So what's interesting, the unemployment rate dropped to 8.1, but that's because so many people dropped off out of the workforce. And then the new employment change, the added number of jobs came in way below expectations and way below what's needed. So that gives them a reason to do it. And so inflation, hey, he can do it because he's getting away with it because, hey, inflation isn't bad right now. It's like, well, nobody's afraid about today. They're afraid about, a year or 5 years from now about inflation going through the moon, But anyways, he's not really worried about 10 years from now. He's worried about why he is the guy in charge. And so he has one thing that's sort of neutral. He has another thing that's negative, another thing that's positive. So really, it could go either way. I don't think they're going to do it. We'll see. But I don't think they're going to do it. Now, there is one thing coming out that could affect that entire decision. Okay? And, there's several reports. There's going to be PPI, and there's going to be, some other statements coming out this week. And, we're going to see several other reports. But there's one report. And this report is so huge. It's so massive that Bernanke actually moved the date that he announces the Fed funds rate. He always announces it on Tuesday and Wednesday. Go back and check. And Tuesdays and Wednesdays. He moved it to Thursday. I don't know how far back, but I looked all the way back to 2009. I couldn't find a single instance of it ever happening on a Thursday. And so he makes an announcement on Tuesday and Wednesdays, but he moves it back because he's afraid of this announcement. What does it mean? Is it going to give the market a big run up and then he doesn't have to do anything? Or is it going to crash the market and he now has a really good excuse to step in? Okay? It's a lot easier to launch quantitative easing, too, by the way, when the market is not flying up like it has been. So, anyways, hold it right there, and we're going to come back. We're going to talk about this announcement, what it's coming out, and what it means to the entire global economic stability. Be right back after the commercial break.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome back to the Diagnostic Trading Hour here with Darrell Martin. And we were going into the biggest announcement that is coming up. Okay, this huge announcement that could have global implications. And you want to make sure that, you really are ready for this announcement that's coming out. So what is the announcement? Well, the announcement is going to be coming out, and it's going to be coming out on September 12th. And it's going to come out overnight, probably around 4 a.m. That's usually when they have released their announcements in the past from the German Constitutional Court. And they are making a ruling on the constitutionality of the ESM. And the ESM really is something they need in place to make all these changes permanent. However, it completely violates. It is insane. I was reading more details on it. It violates their constitution. Whether or not they're going to pass it, who knows? We've seen all sorts of things passed by the Supreme Courts lately that don't necessarily line up with the Constitution. So, but the German Constitutional Court ruling is going to say whether or not the ESM is liable. Why wouldn't legal? Why wouldn't it be legal? Well, here's the thing: it makes every EU member, liable for every EU member's country's debt. So, which basically Germany already is on the hook for just about everybody else. But if anybody decides to jack things up or whatever, Germany's on the hook for Greece's debt just as much as Greece is on the hook for their own debt. So basically, there's a backstop there to make sure things don't go down. Basically, it's going to put, and I read an article on this that I thought was really good, And one of the things it talked about is basically Germans are about to become, about to enter serfdom to the entire EU. So they're about to be serving the entire EU because they have this, basically strong economy in comparison, at least, to the others, and they're about to end up having to, take on all their debt if they agree to this. Also, instead of, the way things have been set up, parliaments are going to start deciding who controls what regarding basically what are your budget and how's that going to work and do we approve it? And if we don't approve it, then we're not even going to issue you the money for the loans. And so, it puts all these countries under like a parliamentary format and individual and unique, which, honestly should have been done to begin with, or the EU shouldn't have existed at all. But, because, you can't just have all these different branches doing things. It's sort of like having the United States, but a lot worse in the sense of, and I mean that in a good way, but in the sense of, having like California needing to be bailed out because they have so much money going into, all these benefit programs and all these welfare programs and into education of non-citizens, things like that. And, I'm not making any statement one way or the other on any of those things, but it's, okay, so this state's doing really well, therefore it is going to have to help support that through taxes, but at least it's balanced out. It was up front. You got 50 states. How do we best stabilize every state? Whatever. But on the back end, like when you're trying to change this, when you have individual countries, these aren't states, okay? These are countries doing this. So it's a whole different level. And now they're literally if they approve this, all the countries actually have to change their constitutions. And there's 5 countries that are holding out right now that are, sort of trying to figure out what they're going to do. Germany, of course, is one of them. And so, they're trying to figure out what they're going to do next, how they're going to handle it. And if the German Constitutional Court says this is not within our constitutional rights, either go back and rewrite it or, no, that puts a big dent in Draghi's whole bond buying plan. That puts a big dent in the stability mechanism versus the patchwork that's been happening. And you can see a big fall because it reawakens the entire crisis. You can easily see yields start spiking up all across the board. And again, remember what I was talking about. Let's say Spanish bond yields fly up. They won't buy any bonds from Spain to bring the yields down unless Spain or France or whoever decides to make austerity agreements, which are not politically popular. And a lot of them got elected on saying they wouldn't do those things. So they won't buy them. So now they spike, and now there is no backstop. Okay? And so there's no ESM, there's no bailout bonds coming because they won't do it. Draghi say, hey, we'll buy them. We're here. We have no limit on how much we'll buy. But you got to agree to some, we got to get some fiscal check in order. So there's no answer. So that's literally what's coming up, okay? The entire, the feeling that everything is okay in Europe could blow up on the 12th. And when that happens, of course, if it does, then Bernanke could step in and say, hey, due to the European crisis and unemployment and the stability of inflation, the way he measures it, we need to go ahead and launch out another round of QE. And so it gives him a way to do it, but not an unpopular way because it's warranted. So be watching that because, man, that's going to have a big impact on the Fed. You thought the jobs report was big. This is 10 times as big. This moved when the Fed funds rate was going to be announced. Stay right there. We'll be right back after the commercial break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And what we're doing is we're now going to go into our statistical analysis. And we're going to be looking at basically just, where have the markets been, what have they been doing, and we'll be releasing these deviation levels out to you very soon. And right over here, what you can see is looking at gold, and we had a deviation level on gold that went down to 1730.6, and we had gold just barely, like right there, and just came down about not even quite a point below it, and or about a point so, and this stopped, and half deviation level. So quiet day, no news, no big surprise, pretty much targeting half deviation levels on no news days. And looking over at a couple other things, and usually you expect it also to be a little quieter after a big move like that, and usually a little bit of a drawback to a certain point. We'll see how it all turns out for the day. But we also let's look over at some other areas. We'll look at the S&P and see where those levels are at right now, and zoom on in that for you. And on the S&P, looks like we're at 1436 right now. And Billy has not done anything. So half deviation level down, would have put it down at 1432. And overnight, we actually did have at 1433 and go up to 1444, nowhere close to that one at this point. So we got the half deviation moves over there. And checking out the Russell 2000 here. And looking at how that's doing. And over on the Russell, it is right now at 843.5. And it looks like it moved down to a low of 839. And to just back up, make sure we do get all that action there. There we go. So 839, and we had 838.05 was a half deviation level, a move up to 847.05, still a few points away from that higher end. And now going over and checking out the NASDAQ and seeing the details on the NASDAQ with the deviation levels. On the NASDAQ, we got it moving down right now. And let's see, the low on the NASDAQ is 2804. And looking over here, we got a 2808, then down to a 2802.67. And so it looks like it came pretty close to that 0.7, so just a little bit past the half deviation level. It sort of spiked past it and bounced on back up and basically sitting right now at a half deviation level. And if we go over and we check out the Dow, then what we can see on the Dow here is it did have a little bit of move, sort of shot up, and done a couple things. I did a couple of trades this morning. One of them involved a long Dow trade, and checking that out, looking over at the Dow, we have a deviation move up to about 13,353. So we still got a solid 30, 35 points off the high before we get there. And on the low side, let's see, it can move down to as low as on a half deviation day, 13,239. Haven't done that, so it's really just staying inside those deviation levels also. So again, always remember, no news days after big days usually means flat days. So maybe a little bit of up, a little bit of down, right? But pretty flat overall. Checking out the copper and how copper is looking right now. And here's what we can see. Copper, like I said, has been one of the big movers of the day. And checking out copper, it is sitting right now at 3.6885. So if we go over and get right into it there, we can see that, oh man, let's see, we got 367, 3686. So really it just has not moved. Let's see if we go 3.704. Okay, so one deviation move up on copper, 3.704. It got to 3.700. So it literally hit the deviation level and stopped. And basically pulled back down, went back up, pulled back down, went back up, just flat for the day. And so those deviation levels just right on target there. And we go over, we can check out gold. And it hasn't done just a whole lot, but has had a little bit of a move there. And so if we're checking out gold, gold right now sitting right at the level of 1732.4. And that is just above, let's see, the level, the half deviation level on gold. Again, no news day here. 1730.6. And market dropped down to just below 1730 there. And so nothing, big on gold. Looking at silver and checking out how that is looking on the day. Is we got it right now 33.62 with a deviation level of 33.69 would actually be the close of last time. So it moved down to 33.33. And we came down to 34.40. So not even quite half a deviation down. And on the high side, we did have some movement, early. Sort of the overnight late session, whatever you want to call it, last night. And that move took gold up to a half deviation level of 34.05, and it went to 34.02. So, again, those half deviation levels, really big, really important for no news days, days after big move days. And then one of the other big movers on the day, we got natural gas moving. So let's check out natural gas. And that gap down we saw right there from Friday to Sunday. And what has it done so far as its move? Well, natural gas, a one deviation move on natural gas would put us up at 1.2767, and we went up so far to 1.2742. So a lot of volatility expected right there in that market, and but we're not quite to the top, but it came pretty close. And let's see if I narrow that down. 1.2742 was the 0.7 mark. That's where we start tightening stops if we're going for a one deviation move. And it got to 1.2743. So that would have been a great time to be tightening your stops because it just flattened out on you. And then checking out some oil. On oil, what do we got going on? And on oil, it had some moves. Man, look at that. It just drop and back up and back down. And so let's see. What are the deviation levels? Because that's one of the ones I love to play reversal plays on. And closed at 96.42 last Friday. And looks like a one deviation would take it down to 94.70. Did not hit that. Down at 95.22. Would have been a 0.7. We got really close to that, only like literally about 10, 11 cents away from that level. And the next level is 95.56 as a half deviation. So 95.56, about right here. And you can see that's where it just started, that half deviation. You can just see, some volatility, and then it popped on back up. And it basically moved a half deviation level right back up before chilling out and coming back down. And if we go over and we check out the ags, go to corn, and corn has definitely been moving today. So another one of the three big movers of the day being natural gas, copper, and corn. On corn, we had to move, and we're all the way. We're sort of near the lows. It's doing a little pullback at the moment. It's at 785. And on corn, it looks like 784.22 would actually been that one. It broke through 784.22, went down to 781, but 784.22. So right here on the charts, this is the one deviation level. So it basically spiked that, and then basically dumped all their shares off. You can see that volume spike right there. If we zoom in more, it basically did that volume spike right at the deviation level, and then just pulled all back up. Again, 784.22 on that one. And just make sure I got that number right, but I'm pretty sure, yep, 784.22. So it came down here, spiked it, hit it hard, closed all their shares out, and pulling it back up. One standard deviation move down. So basically, it ought to be the solid move down for the day. It'll just oscillate or do a half deviation level back up. Don't expect any kind of big move continuation down on corn. Looking over at soybeans, has not moved near as much as corn today. It's been more of an up and down pattern. And so if we check that out, where soybeans is at right now is at 1729. And on the soybean level on the downside, it could have moved down to 1716.57, basically 1716.5, and it moved down to 1716. And so that's pretty much what it just went like right to the level, and it stopped. And so right there, that 0.7. So if you were short on the open, which meant you were grabbing it and riding it fast there on the way down, you would have tightened that stop up. And let's see here. What about on the way up? On the way up, soybeans could have moved up to 1750.74 and a half deviation move. They didn't, of course, get that high, but they did have a 14-point, let's see, deviation. So 14 would, if you had 14 to 1716 on the retracement, that puts you at, let's see, 1716, 1720, 1730. So about 1730 being a retracement level. And let's see, it definitely did that retracement level. And it pulled up another 14 points or so. So it actually pulled up a lot, like 2 deviation levels up after that drop down. And now we're not just, we're not seeing a whole lot at all on soybeans for the day. So, but I mean, it had a dramatic just, fall right there, right at the end of the day. And, you may have caught that or not. If you did, hopefully you turned around and went the other direction before the market closed out on you. And, but then it just pulled on back up. And, you could have got a nice ride there on that 14 points for the day on the open here. So when we switched over to the the new day, so on the open there, what did it open at? It opened at 1724, so about 1728, 1738 would have been about your profit target zone, about right here. And yeah, I mean that turned out to be a good level. You're not trying to catch the highs and lows, just trying to catch. If you can catch 70% of the move, you're really happy. And so that soybeans right there, going over and looking at a few currencies to sort of see how everything is going. And sort of seeing how we got everything going on here on the Aussie dollar. Aussie dollar should have moved. Let's see, it's down to 1.3048. And on the Aussie dollar, it would have moved into 1.354. Would have been the half deviation level, so about right here. And from there, it could have moved on the next two levels that Aussie dollar could have moved down to 1.3042. We'll put it about right here. And you can sort of see how it stopped right there before it pulled back, and then it sort of popped it and went back up. So, and then the final deviation level, if it decided to move a full deviation for the day, would be 1.0325. So Aussie dollar could continue to move down. We'll see how that plays out by the end of the day. And we'll check out two more currency pairs. We'll look at euro dollar and pound dollar. And, of course, those are going to be some hot topics coming up here soon with the big German ruling. So be watching, of course, the market, be watching gold, be watching the euro dollar. And so looking at the euro dollar, we got that sitting over at 1.2816 on the close last Friday. Right now sitting at 1.2. Wow, look at that, man. It is moving on down. So 2789, and it's falling down pretty quick. I moved there 15-20 ticks just here in the last couple minutes. And you can see that this massive drop. 2790, yeah. So I mean it just fell on down there. Euro dollar, what are we expecting on the euro dollar? Well, 2780 is the first level. And so that's literally right here. So back up, let's check that out. That's sort of how that lines up. And I'm looking at, since the close there. So this is actually a half deviation level. And it's just been playing on that level. It came up off of it and then just nailed it again. And then as soon as it hit it, it sort of turned around, popped right on back up. See how fast that move was. That was just a couple minutes. I mean, it just boom, 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 boom. And so if it does keep going, where do we expect it to go? All right, maybe you're in a short Aussie dollar trade right now. This could be pretty useful for you. How low can it go? So looking over here, 12780 is our half level. Our Titan stop level is 1.2766, so we definitely could easily get down to that. We came down to 1.2769. And the one deviation, so the furthest we expect it to move today anyway, is down to 1.2744. Okay, so looking at that right there, 1.2744. Not too much more move down, but we're right at that half deviation, 0.7 deviation level. So if you're short, definitely be taking some profits right now, tightening your stops, hopefully locking in some profits there in case it does decide to fly back up like it just fly down, so you can capture some of that. And we'll check out one more move, and that is, after seeing that kind of move, I like to look over and see if anything else is going with it. Not right now. And hopping on over to pound dollar and seeing what we got on that side. So on the pound dollar last currency pair here, and we got it down to 1.5973. That'll put it right about here. We had that last little spike before the reversal, so this will be where you'd be tightening your stops up. And you'd have been pretty much knocked out about right at this level if you were doing, like 1 bar back, 2 bar back stops. And you'd be stopped out right near the low. So it would have worked out really well. Turned around, pound dollar, you can see that starting to get some volatility going in it also. And it could have moved a little bit lower, but I don't see it going really much lower than that before the close of the day here. And went ahead and did a reversal. That reversal, 64 pips was is a 1 deviation move. And let's see, what do we get right here? We have a low of 1.5958. So if we go in and pull that up on the calculator, 1.5958 plus, we'll just see if it even moved that far, 64 pips. And that was not the right way to do it. 1.5958 plus 64 pips. There we go. 1.6022. So basically being the expectation that the furthest move back up it should get. And it got within a few ticks on that run back up, 1.6017. So again, you would have been tightening stops and then closing it out, and it fell on back down. So it really has moved basically a pretty far deviation move in both directions. And I don't know, I'd be pretty hesitant right now. If you made some money on pound dollar, I'd be booking them, enjoying it, and chilling out now, waiting for the next great trade set up tomorrow. So that sort of wraps up our statistics side. We got our fundamental side wrapped up. We've talked about the news announcements coming out. We've went into some of this, looking at a little bit of the technicals, and we'll talk about some seasonals too. Those will be coming up near the end of the week here. And so what do we got on the seasonal side? There's a lot of different things we can go into. One of the things, of course, is going to be payroll cycles. It'll be happening at the end of the week. So let's say we do have a lot of problems. That will help stunt the drop. So like on the 14th, 17th, 18th, because people get paid on the 15th, right? They get paid on Fridays, right? And so people get paid on Fridays and the 15th. People get paid on the 15th. Actually get paid usually early on the Friday, on the 14th. So you got 2 payroll cycles coming together at one time. And why does a payroll cycle, seasonal cycle matter? People get paid. They have money automatically going into mutual funds, company match contributions, things like that. Mutual funds, what are mutual funds? Mutual funds usually holding stocks, right? Or bonds, depending upon what the allocation is. And but historically, basically, all the gains, okay, you can take all the gains from what are the middle few days and the first few days of the month, and you can account for all the gains, like in the Dow, literally. So it's just an interesting stat to look at that seasonal cycle because of the mutual fund, cycle of payrolls. And so that can sort of help, dampen, or not really, it'll accelerate an up move, and it'll, I guess you could say, dampen a down move. So basically, it can slow it down a little bit because there's money coming in on autopilot, not on anything else. And, so all the other money's coming in, but this money's coming in based on not facts, but just the fact that people, have money going automatically into mutual funds. So stay right there. We'll wrap it up for you on the other side here. Be right back after the commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
All right, folks, welcome back here to the Diagnostic Trading Hour. And go ahead. It looks like we got a caller. I got Edwin here from San Francisco. You got a question about hedging trades over on Nadex?
Yeah. Hey, Darrell, how you doing? First off, great show. Little background, so I'm new, just getting to know the Nadex platform. So a couple questions, one a suggestion and then a question. What might be helpful for all of us who are listening to you is if you maybe take one day a week and maybe do like a Hedging Friday show where you go
That's a cool idea.
Hey, here are trades where I normally will think about hedging my trades, and here are trades where the directional trades, which, currency bets, intraday bets, where they don't make that much sense. But the question for today kind of relates to that. Maybe you could start it off. But when you whether you're doing currencies or commodities, and you went through a lot of the movements, how often do you hedge those trades? Do you hedge every trade if you're all in Nadex? And I'm putting aside, if let's say one option is to do a future in a different account and hedge it with the spread in Nadex. But what I'm really asking about is if you're only trading in Nadex, do you hedge every trade, some trades? How do you approach hedging?
Okay. There's different ways to do it over on Nadex. Okay. You don't have to hedge all the trades on Nadex because Nadex by itself hedges itself in the sense of it has a limited risk built in. So if you're looking at, let's just say, like right now we're on pound dollar. Okay. Yep. So if I pull up Forex binaries, dailies on pound dollar, then it's whatever the risk is, it's going to be really low. But let's look at the spreads. That's usually where you're talking about the hedging. And so I'll pull that up over here. And let's see here. We got pound dollar, dailies. And so if I'm looking, or different time frames from what you're doing, we got 1.6 right now. So let's say I wanted, for whatever reason, right now to buy the pound dollar. Okay?
Yep.
Then I could go in and I could buy the pound dollar, like on, whatever broker you're using for Forex spot. And then I could sell the spread. So right here, I'd sell the 1.570 to 1.600 if I'm doing both. All right? So that'd be hedging if you're doing two different ones. And that only give you a 4-tick risk. So pretty small risk. Because where you're buying the Forex versus where you're selling the spread, you'd have a 300-tick stop loss for a 4 pip risk. So and it's 1-to-1. Now, if you wanted to do and
you would do you'd recommend a daily on that?
Yeah, I like dailies if I can get them. Now, right now, it just happens to work out really well because the pound dollar is sitting right at the floor and ceiling of the spread. If it's not, then I have to look at a couple other options. So I may look at the 1-to-3, the 12-to-2, and it all depends on what I'm doing too. Because maybe I'm going out and trading a news trade, so like right before Fed funds rate, for instance, or whatever. Then I may go in and just get one that's going to expire like an hour after that. Because if it goes against me, well, what I had the hedge on, I'm just going to close it out and be done with it. If it goes in my direction on the news trade where I think it's going to go, then I don't really care about the hedge trade. I'm just going to leave it there. And then I'll close out let's say if I went long or something, I'll close out the long future of Forex, and then I'll leave the spread on. If it falls back, I make money. But if I'm just doing, say, the spread by itself, okay, then I could go in here and I could look, like say at the dailies. And dailies are going to be best on spreads by themselves if you can find one close to the floor zone because you have more time to be right, okay? So if I go in here and I say, if I want to buy the pound dollar, that'd be, buying. And you can actually see you have a little bit more risk. You actually have 6 ticks of risk on this. But so you actually have less risk if you combine the two together. But if I buy it, then I'm only going to have $6 of risk at $294 profit potential. I don't expect it to go up $294, but that is my profit potential. And it doesn't matter how far the pound dollar goes against me. If it goes back in my direction, then I can make money on that. But what I will do tomorrow is I will focus on the hedge trades on the show for you. That sound good?
That would be terrific. Great.
Awesome. Well, thanks for calling in. And as I focus on the show, if you have more questions about it, give me a call tomorrow.
All right. Perfect. Thanks, Darrell.
Hey, man. You have a great day. All right.